So first, determine the amount of the goodwill arising on acquisition of Omok Limited, blah, 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 and consolidate the statement of financial position of Omok Limited. Okay. I will now say consolidated. Statement as at 30th September 2018. Good. Non-current assets. We have PPE. With the first one, we have 4140 plus 1395. The intangible assets. $891 plus 540 plus 158. Goodwill. Current assets. Current assets. Inventories. 1102 plus 819 plus 414. Trade receivable. 2016 plus 891 plus 486. Cash. $90 plus 450 plus 190. Total assets. Equities and liabilities. Share capital. Share premium. Obtained NCI. Non-current liability. %3 debenture. $1640 plus 288 plus 333. Defaulters. 1187 plus 265 plus 243. Current liabilities. Yes. To balance this in exam, the first subsidiary Omoboti, I would say analysis of group structure. He has two subsidiaries for better understanding. Omoboti, Omoaye. Date of acquisition, retain earning at DOA. Effective interest, NCI, then the cost of investments. I need adjusted retained earning. Adjusted retained earning of subsidiary.
That's for Omope. Okay.
I need adjusted retained earning of subsidiary of subs. He has two subsidiary. One is acquired, I said, the first subsidiary, Omoboti. And the second one is Omaye. As per SOFP, as per SOFP, I need to determine the net assets. The net asset of subsidiary, I will determine that. Of the two subsidiaries, determination of net assets. The first subsidiary, it's a determination of net assets of subsidiaries. The first one be Omoboti. So items, DOA, DOC, POS. I'll go further. The second subsidiary, I need to determine the net asset of second subsidiary. So determination of net assets of subsidiary, Omaye. Yeah, I need to calculate goodwill. Goodwill calculation. In Omoboti and in Omaye. I'll say cost of investment. Add NCI, purchase consideration. I will less the net assets, DOE, then the goodwill. I will leave two line space. I don't know whether there will be impairments. I will leave, I will go. Then the retained earning of the parents. As per SFP. That's all. I'll now go to determine the NCI. NCI in two subsidiaries. NCI in normal body and normal date of acquisition. That's all. I will now open another. Let's open another one for the calculation. All those work. Let's open it here. Oh. Good. I will now start reading the question. I will say workings. I will now start reading the question and start posting. First, Omope Limited, a quoted company, operating in the manufacturing sector. It has investment in the numbers of companies. The following are draft statement of financial position related to Omope Limited and its investee companies as at 30 September 2018. Good. All figures are going to be correct. So on 1st October 2015, Omope acquired 80%. Oh, I'll go and fill in the gap. I analyze the group structure for my sake. He acquired how many? 80%. I'll go to the question. Oh, on which day does he acquire? Say 1st October. 1st October 2015. He acquired 80%. I start filling the gap. So if I need the group structure, I need NCI percentage, I'll just go to my table. I've analyzed. Of ordinary share capital for Omope Limited, for a cash consideration of 3,285 million, 3,285 million. Oh, cost of investments. He has given me. Sell is 3,285. I will ask, has it been recorded? I will check the non-current assets to investigate. Oh, that is recorded. To the goodwill calculation, I can go there. Say 3,281. That's it. So far, so good. At the date of acquisition, the retained earning of Omope Limited stood at 1,650. He has given me retained at the date of acquisition, 1,650. Don't forget retained as part of the net assets, 1,650. I can quickly post that to the net assets. I'll say shares. What is the shares in subsidiary? Omope. I'll go and pick the shares, 1,000. Does he have share premium? Yes. The way I pick the share, I'll say, okay, share premium. 160. You now give me retained earning at the date of acquisition, which I have put in the table, 1,650. Good. Based on the question. And the fair value of identifiable net assets of Omope Limited approximate the approved value except for an item of plant which had a fair value of 175 in excess of the carrying out, in excess, revaluation sub, in excess, revaluation surplus on plants, PPE, 175. I'll go and post the second leg by debiting my PPE with 175 plus. That's it. Based on the question. The plants had a remaining economic useful life of 5 years as at that date. 5 years. Economic useful life of 5 years. So I can calculate depreciation. I need depreciation. When I say 170 depreciation, 175 divided by 5 times from the date of acquisition to date he has control.
3 years.
DOA to DOC, how many years?
3 years.
3 years, thank you. 175 divided by 5 times 3. That will give me 105. So PPE will be credited minus 105. Adjusted retained earning of the owner of the asset. Adjusted retained earning of subsidiary. I will also debit minus 105. Good. I'll go and post. No issue. PPE, out of the surplus of 175, 105 has been consumed. Then adjusted retained earning of subsidiary, I will depreciate. Depreciation. 105. Let's go to the question. As per SOP, what do they have in their respective retaining? 19,625. For the parents,
$4028.
That's it. So additional information 1 is clear. I'll go to additional information 2. Okay. On 1st April 2014, Omope Limited had joint control over Omaye. Oh, Omope, it does not acquire it once. Joint control. Okay. I can analyze the information to pick what I need. Information who Omaye, he said, date he acquired, first acquisition, the first investment on 1st April 2014. Percentage acquired, 50%. Good. For a cash consideration of 500 million. So the cost of the 50 million, you pay 500. Good. At that day, the retained earning of Omaye Limited amounted to 225. He has 225 in retained earning. Omope Limited accounted for this share of interest in Omaye Limited using equity method in accordance with IAS 28, investment in associate and joint venture. Okay? In Omaye Limited. Omope Limited, a further 25% shareholding in Omaye Limited, a further 25% holding On 1st April 2018, he now has control. 1st April 2018. He now purchased additional 25% total investment subsidiary. Does he have control now? Yes. On which day does he have control? 1st April 2018. I'll go to the question. You now have control. Date of acquisition. I'll go and post. 1st April 2018. 1st April 2018. You have 75%. NCI will have it. Good. The normal year limited for additional cash consideration of 250 million. For additional cash consideration of 250. Okay, no problem. For the acquisition of 25%, he paid 250. Good. Based on the question, when the retained earning of Omaye Limited amounted to 525, so on the day he has control, 525. The retained to use at the date of acquisition, 525. But I know in piecemeal acquisition to have control, the cost of investment I must use. The total cost of investment that should be used that should be chat here. If you got my left, don't have time. Total cost of investment will now be consideration, transfer to have control, which is 250, the money paid to have control, plus the fair value of the 50% investment he acquired in 1st April 2014. What is the fair value in 2018? Fair value of the previous investment. This is the goodwill calculation. The fair value of original investment in Omaye Limited as at 1st April 2018 was 980 million. 980. This is it. 980 million. The fair value. This is my total cost of investment for the goodwill calculation. No doubt. 250 plus 980. What does it give us? 250 plus
1230.
1230 will be used for the goodwill calculation. I will go to the cost of investment. 1230. He has in return in 525 for the goodwill calculation. But don't forget, you must calculate gain and loss. I will ask, what is the carry amount of the investment? Has it been recorded? These are things that will be in my head. What is the carry amount of this investment? Or has it been recorded? I'll go and get carry amount of the previous investment of 50%. Initial cost of 50%. Cost of 50%. He paid 500. How much? Let's see. 500 for the 50%. 500. Share of profits. I will share profits. Share of profit of associate. From the day you become an associate, within the day you become a subsidiary. That's why they are giving me return. You must know in exam. This is part. Students need to get that logic. There's a profit within the day you become an associate and you became a subsidiary. You must enter something. Look at it. From this day, 1st of April as an associate, to 1st of April 2018 as a subsidiary. Within that year, I will collect 50% on share. Students used to forget this. I don't know why, which is very clear. It was only once I can assess piecemeal acquisition. It's one of the areas we are looking at. That's piecemeal. Disposal of subsidiary. Cash flow. Those are areas of concern to us. Why? Because they are long overdue for testing. Sub was, and this shape was tested back to back, back to back, back to back. So in the meeting, they say, Kazim, you see, foreign subsidiary and sub P-class. These are just recently tested. In short, this shape, it has been over-tested. I will not lie to you. When some group has not come, it has come. They tested someone and this shape 7 times. If you calculate from the section of 2014 to date, it has come 7 times. Why piecemeal is only once 2017 May? What is subsidiary? They brought it in 2021. They still brought it last that. This shape, back to back. Last 2 nights ago, 3 nights ago, 4 nights ago, it was also and this shape. To the extent we are tired. Then I said, see what you said. Look at the area very well. What are we expecting this at? We are only just predicting. We don't know what will come. They must decide to bring the foreign subsidiary again. What can we do? What can we say? We receive these 3 places have the chance of being tested. Group cash, disposal of subsidiary, piecemeal acquisition, because it has been long overdue for testing. I'm going to share of a profit of associate. I'll say, okay, 525 minus 225 times the 50%. How much is he giving me? Somebody help us, please.
150.
150. This is the carry amount of the investments, 650. But you will not see 650 in the statement of financial position as it be recorded. He purchased additional one. Additional investment. Investment of 25% at a cost of 250. This is what you will see in the book if it's recording it as carrying amount. So the carrying amount of the total 75% investment, the carrying amount of investments that you will see will be the 50% cost of 50%, which is 500. The share of profits of associates, 150. And further 25% investments. Of 250. 900. This is what you were going to see. If it's recording it at carry amount, they can record it either at cost or carry amount. Some question will just record it 750. You should have go and post the share of profit, just like the one we did during the week. So you don't have, you must to look at the two things. What is the difference between the two? If you record it at cost or record it at carrying amount, you must know. So that you know that 150 has not been posted, you go and post. But this 150 has been posted. That's why you see the carry amount of investment in the non-current asset as 900. Okay, good. Before we proceed further,
For the profits, if they hadn't if they carried it, if it was
at
recorded
cost,
at
at
cost,
cost,
that profit of 150 would have debited the investment and credited where retained earning of the what now? The retained, is it the retained earning of the parents? Then later we'll now transfer it from the investment to cost of investment to calculate goodwill.
good question. Good one. Said investment. Just like the one we did on weekend. During the week, it was recorded at cost. The profits. So look at it. If he has not recorded the 150 in his book, do you agree we'll have seen it at cost of 750? Do you agree?
Yes.
Good. You know, I'm using the fair value of the old subsidiary. I'm using the fair value. Fair value. What is now only my duty in exam? The 150 will just be credited to retained earning, the share of profit. We credited to the retained earning. Automatically, we will have debited investment for goodwill calculation. How?
Direct. Okay.
Because you are using fair value. You don't need to convince yourself. You will just credit retained earning of 150. But don't forget, the second leg will have to debit investment for the goodwill calculation. Is there already when you have picked the fair value of the previous investment?
Yeah.
The debit aspect is there already, including gain or loss on the previous investment. I need to calculate gain or loss on it. You will see the gain is also there already. Your own in example just to credit share of profit of 150, forget every other thing. It's there. That is just your own duty.
Okay.
It's there in the investment already that we are using. The cost of investment you are using for goodwill calculation. Like if I want to calculate the gain or loss on previous investment now, what is the fair value of the previous investment? 980. What is it? Just okay, no problem. Fair value. I want to calculate gain or loss on previous investment. You see, gain or loss on previous investment. Fair value of previous investment. 980. Then carrying amount of previous investments. 650. Gain. 980 minus 650.
330.
What will I do with the 330? I'll go and credit retain. Where is the second leg? You debited investment. So this 980 is going to goodwill calculation.
Yeah.
Disturb yourself. Is there already?
Yes.
Or just go to the return of the parents. Gain on previous investments of 330. That's all. My goodwill calculation 1,230. That's all. I'll proceed. The fair value of the original investment was 90. No fair value adjustment were necessary in the respect of business combination relating to the Omaje Limited. Say no fair value adjustment to the net asset. So I'll pick the net asset. What is the share capital? No more. Good. Oh, thank God we got that. I'll just go to the question. Omaje Limited. Items. DOA, DOC, and POS. Excuse me. Share capital. Go and take the share capital to be 900. The share premium, 90. Return at the date of acquisition, 525. Say no changes. He has told me no changes to the net asset. That's what he said. Say no changes. The one that has changes has told me. Say this one, there's no changes. What will you want me to do? 900 plus 90 will give us 990 plus 525. What is the figure? Plus 525. Please help me with the figure, please.
1515.
1515. Thank you, my brother. 1515. That's all. The net assets. I can fill in the gap. See, it's what I did right. You will mark for me. I can fill in the gap for the net assets. But this one, he said there's only one adjustment to the net asset. 1,000 plus 160 plus 1,650 plus 175.
That is 2985.
2985.
Doesn't add up.
I will post 2985 in my goodwill calculation. 2985. Jimmy is what I did right. Will mark for me. 2985. 1515. And if you are the marker and you are marking, are you not going to give me something for doing this? Definitely, you usually give me something. I have gotten
This
the
part,
net.
sorry, please. This part where they're saying the recovery amount of the net asset of
We are still
Omaje was
coming, my brother. We are still coming. Every part you are going to do. Recoverable amount can be given in 3 ways. It's either they give me recoverable amount of the goodwill for impairment testing purposes, or they give me recoverable amount of the cash generating units, or they give me recoverable amount of subsidiary. Recoverable amount of subsidiary can also be divided into 2 ways. They can also say without considering liability. With considering liability. Yes, I know what to do. There is no 2 ways to it. It is laid down. What we are doing is not Nigeria standard. It's laid down by international body, which is in UK. The sustainability report, they delivered the book to me last 2 months. I was just reading it because they say for next diet, it will be fully inculcated in the syllabus of SIA. You must tell us whether your company is stable financially. Sustainability report. Before, that's it. was tell us before. It's not just part of annual reports, a story like narrative. Now you will see the debit and credit part of it. I cannot brought the debit and credit part of it in case study last 2 days. Inside case study. But they say for next that sovereignty reporting, debit and credit part of it. That is the nature of our job. You must keep on doing it and advise our students. After passing, don't neglect the book. Still go back so that you can be relevant to what is happening. Thank God. After ECAM, you still have so many exams to write, like CFA, ACCA, like CIPM, and so much to write. But there's some exam by qualifying as chartered accountant, the certificate is yours. Go and pay for the exemption. Social Institution of Taxation of Nigeria is free. So far you can pay. I think CIPA, they say for those who have qualified for long, they will write the final stage. Then, for those who just qualified, it's free. So, Mr. Robert, after you qualify, you can just ask them about first certificate. So that when they call you, you say ACC, CIT, FCA. The story will be longer. You'll be impressed. They will think that you start for each one of the exam. No. By virtue of ACA, you get some for free. Just like get one. Even in ACCA, you have to write 4 papers at final level. You get your ACCA, you're certified. You get your ACCA. So there's no issue. Okay, let's proceed. But how many years are we going to spend on this word? There will not be writing exam to infinity. But if you want to write exam, you can. So we have gotten the net task. Let's go to additional information 3. It is the group policy to measure non-controlling interest at fair value at the date of acquisition. The non-controlling interest in Boti Limited and Normaye Limited had a fair value of 200 and 250 respectively. NCR here is 200. 3485. Then 250 here. 250. 108. I cannot get my goodwill. 3485. Oh, this is not goodwill. This is a negative goodwill. Gain on purchase bargain. Oh yeah. What does it give us? 3485 minus 2985.
500.
500 for this goodwill. Then for this.
Negative 35.
Hmm?
Negative minus 35.
Good. I will go to the question. I have gotten my goodwill. But I see in payments. This is 250. SCI, second leg. Is it 250 and 200? Which one is 200? This is 200. Why this is 250? Bargain purchase. It's a fair value. Bargain purchase must be shared. This will not collect. This will collect 25% of the total negative goodwill. What is the 25%? 0.25 times
0.75.
5.
8.75.
8.75 will come to you. Then retain any of the parents. We collect the 75% of it.
26.25.
6.25.
26. 26.25.
Good. I'll say bargain purchase. $26.25. That is it. That is it. That is it. That is it. So I'll go. Additional information next. Please, you are free to ask your question. You are free to ask question. It's only 4 people that is in this class. 3 people said. We agreed this from the beginning. That Sunday we will use it to make over as a makeup. Additional information for Goodway. Omo Boti Limited and Omaye was tested for impairment. As I started September 28th, there is no goodwill in Omo Boti. Which impairment are you testing? There was no impairment relating to Omaye Limited, but the recoverable amount of Omo Boti. He does not want to tell you that this one is a gain on purchase again. He has given me recoverable amounts. I will not test for impairment, my brother. He has given me recoverable. Say test for impairment. The recoverable. On which one? Omaye. Is Omaye or Omo Boti? Omo Boti. Recoverable amount. What is the recoverable amount? Given in the question, $3,480. I will now go and calculate my carrying amount to determine whether it is as impaired or not, to get the impairment loss if any. However, determination of carrying amounts. Determination of carrying amounts. Impairment is tested annually at the year end. So I'll get the net assets at DOC plus the goodwill. The goodwill now depends on how the value is. Is it fair value or share proportionate? The net asset at DOC plus the goodwill. How they value the goodwill is either fair value or share proportion. If it is fair value, I will add. So when we finish the question, I will now go back to the net asset at DOC because why? Something can affect the retaining. So let's leave that. We go to additional information 5. We will now come back to this. Additional information 5. Omopai Limited, who is the parent, sold inventory to Omaye for 554 million. Sold inventory. Total sales is 54 million at a fair value. Omopai Limited reported the loss of the transaction. Oh, loss. It is not profit, it's loss. Unrealized loss on the transaction. Otherwise, is there any unsold? Is there any unsold? Question 6. Is there any unsold?
Yes.
Omobote Limited still edge. Half of these goods in inventory, half of it. Half of it times 54. That will give me 27. I will now apply the formula profit by saying profit, but this time I say loss over total sales times unsold. What is the loss? We have 9 over 54 times 27, 4.5. What do I do? Don't forget, if it is profit, I will debit the seller. But now I will do the opposite. It is loss, I will credit the seller. If it is profit, consolidated inventory will be credit. Now it is loss, I will debit. Opposite of it. Unrealized loss on inventory. Opposite. I'll go and do. You see? Plus, I will debit 4.5. Who is the seller? The parents. I'll go to the account of the parents. I'll credit. Unrealized loss on inventory. 4.5. That is it. Next. On 1st October 2017, Omopai Limited acquired a patent right for 45 million to use in a project to develop new products. Omopai Limited completed the investigative phase of the project, incurring additional cost of 32, and determined that the project was feasible, effective and working prototype was created at a cost of 18 million. In order to put the product into a sellable condition, a further 14 million was spent. Finally, marketing costs of 9 million were incurred. Both costs, all of them, are included in the tangible assets of Omopai Limited. All of them cannot be there. Marketing costs cannot be capitalized. It's an expense. In line with IAS 38. The investigative phase, the research phase, must be expense. So, investigative phase, what are those one are we expense? The cost of investigation, according to the IAS 38, cannot be capitalized. Cost to exclude from the intangible, because you have included everything. The glaring one is the marketing cost. Cost of blind meeting. Then the one you for the investigation cost of 32. This total cost cannot be capitalized in line with IAS 38, 41. Must be expense. So the intangible I will credit minus 41. Then the retained earning of the owner of the intangible parent, I will debit minus 41. So go to the question. Intangible assets. Minus 41. We'll go again. Return of the parents need to be expense with the value of what? Expense on intangible. 41. Expense on intangible. Of 41, I will debit. That's all. Okay, that is the end of the question. I can now calculate the carrying amount in net asset at DOC and get my impairment. I cannot do that before because I don't know the total value of retained earning. So 119 minus 105. No depreciation here. 625. 19
1795.
1795. 1795. That's all. I will now bring it down. 1795. 1000. 160. 1795. Then 175. 145 is the post. I will now get the net asset at DOC. 1000 plus 160 plus 1795 plus 175. 3130. That is
Yeah,
it.
3130.
I'm using calculator here, my phone. So that will now give me the net asset at DOC to determine the carrying amount now, whether it's as impaired or not. I will now say, okay. What is the net asset at DOC? 3130. Plus the goodwill is 500. 3630. This is it. This is what I will now compare. The goodwill is at fair value, I will add. If it is not at fair value, you must gloss up. We are still coming to that. Wednesday, you will see that. 3630. 3630. Has he impaired? Yes. It has impaired. We will now say 3630 minus 3430. 150 is the impairment. I will now go to the question. Impairments on goodwill. Impairment on goodwill 150. 150 impairments. 150. 350. Goodwill. Reduce. But the impairment must be suffered between parent and ACI because it is fair value. It is fair value. I will now say impairments. 80% of it, 0.8 times 150. That will give us 120. That is it. The second leg now. The second leg,
NCI.
NCI. Impairments of 30. 900, 90, 625. This will give you 100. But this income, $145. I can share profits. Share profits. Share profits. The first one, but 0.8 times 145. The second one, Omaye, 0.75 times 100, 75. 0.8 times 145.
116.
116. That is the end. For NCI, sure profit. Sure profit. No impairment here. Does not involve goodwill. Sure profit.
29.
This one will be 25. Why this one be 0.2 times 145? 29. I can now consolidate. That is the end of the question. I can now consolidate 200 minus 30 plus 29, 199. 250 plus 8.75 plus 25.
283.75.
That's all. I'll go to the NCI. I say 199 plus 283.75. 199 plus 283.75 plus 199. 482. 482.0. That's all. 482.7. That's all. 482.75. I cannot calculate the retail earning and balance my account. Okay. 102.28 plus 330 plus 26.25 plus 4.5 minus 41 minus 120 plus 116 plus 75. I have 41. Please help me confirm the figure.
I got 4088.
I got 4,418.75. Let's go again. Get 4188. Let's do 4028 plus 330 plus 26.25 plus 4.5 minus 41 minus 120
Okay, 44187.
plus 1. I get 4418.75.
Correct, yeah.
So 4418.75. That's it. I can now go and consolidate them. 4418.75. 4418.75. What is the share capital of the parents? Let's have the figure.
4140.
Huh?
4140.
4140. Thank you. What is the share premium?
329.
Huh?
329.
329. Then the pension 1640 plus 288 plus 333 is giving me 2261.
2261.
261. 1187 plus 265 plus 43. 1695.
1695.
1674 plus 319. 319 plus 299 is giving me 2288. Then 245 plus 118 plus 153 516. That's all. 516. So you have 4140 plus 329 plus 41841 is 4418.75 4418 plus 482.75 plus 2261 plus 1695 plus 2292 plus 516. I have
16134.
134.5. 1613. Okay, let's do this. We still have goodwill of 350 based on the question. 150 has appeared. So for PP, we have 4140 plus 1350 plus 1395 plus 175 minus 105. 6955. Is that correct?
6955.
89. No. Plus 540 plus 158 minus 41. 158. 158.
1548.
1102 plus 819 plus 4.5
2339.5.
2016 plus
3393.
plus what is 393 dollar plus 190 plus
Balanced.
you give me the same figure
16134.5. Yeah.
plus 5 plus 3 good 16 that's all. That is all. That is all.
When they said in that question, where they said something about acquired through equity method,
What is it?
they said something about acquiring through equity method.
That's an answer. When you talk about equity method, we record at cost. Equity means recording at cost, and thereafter adjust for circumstances. It's in your book.
Okay.
Investment
Okay,
in
so when the
assets.
equity, okay, when they say equity method, it's at cost first before the adjustments.
Yes. What can we add? This class will continue because of the number is not quite. You cannot say because you want to finish levels on time and not do that. 5, just 4 people. I don't know why this today. See, because of the guest said 8:30. Don't know why.
Hello, sir.
Yes.
Sorry, this total asset. Can I see the total? We're not getting the correct answer.
Okay, I'm coming.
Can you show?
This is the total assets. Okay, let's reduce it so I can see it.
Okay, okay, okay. Thank you.
Okay. So I know you have planned for the class. We only have 3 more. So next week, Wednesday, this week Wednesday, and so Sunday, you should be able to do them. We quickly face SBR for a week. You need to finish for those things. But, I know that we need time to
Tomorrow.
rest. You need time to read. I mean,
Oh, Mugaini. How many days did you get to thank God for this? So that Monday, Tuesday, Wednesday, Thursday, Friday.
Really, please mute.
Uh,
This is it. So I've said you can look. On Wednesday, we will start equity transaction and complete it. 2 questions. Equity. What is equity transaction? It's a transaction between the parent and subsidiary, whereby the parent reduces its holding by selling some shares or increase its holding without losing control. What do we mean by equity transaction? This is it. For example, the parents has 90%. NCI will now be 10%. Parent now sold 30% of his share to remain 60%. He has not lost control. NCI will increase by 30%, 40%. This is equity. Or parent has 60%. He now bought additional 10%. NCI will be 40. He bought additional 10%. NCI will now reduce by 10%. This will give cause to 70% and 30%. This is the next thing. We only have two. We have equity transaction. One. We have two sub / D shape. Then we have foreign subsidiary. 3. We now have foreign subsidiary. Foreign. So, but these 3, after that, we'll now start doing SBR questions of each. Come to this. Any question on SBR, I'll follow you. That's what we are looking at. So, this will go on Wednesday. These 2 are likely go next on Sunday. Then on Wednesday and Sunday, we end the class. We end the class. Give me the courage to go to the exam hall, to go and finish ICANN. That's what we are left with. Any question you have, you can ask us, you can shout us.